With the news about Google and a potential breakup, we gotta take a look at the charts of some of the big tech stocks. And you might not like what you're gonna see from the Microsoft chart. Let's talk about it. Welcome to Hot Trades of the Day, your show for swing trading ideas. My name is Daniel Wilhelmi, head of trading here at Bull Markets Lifestyle, and let's jump right into the presentation and let's start with Microsoft. Take a look at the Microsoft chart. So, this doesn't look too bad, right? I mean, looks like bullish consolidation, but let's move out a little bit and see what's really happening. So, this is the uptrend since 2023. Clearly broken, retested, rejected, retested again, rejected. Now, we are making higher highs and higher lows, so it's not all terribly negative. But what is negative is obviously what you see with the big green channel that goes all the way back to 2018. And we have reached the upper end of the channel repeatedly, hovering around it, try to break out, bull trap, and now we're back. So if we combine these two factors, the break of the short-term uptrend channel within the long-term uptrend channel, there isn't really much of a party going on at Microsoft. That's not a stock I need right now. Now, would I short Microsoft? Never. It's too popular. The AI euphoria can always come back. But this is not a stock that I need to have. And we know there's real long-term danger if the market goes down. Basically, look, you will some bears will figure this structure out with a long-term uptrend and then will come out and say, oh my god, Microsoft is going to collapse, it's going to go down to the lower end of the channel, right? They'll probably draw this pivot line right here about 278 and it makes for great headlines. That's only going to happen if we get a real correction of market. Unlikely. But there's definitely risk. There's a risk for potential head and shoulders, right? We don't see it right now because we're making higher highs, but this will trigger when we go, by the way, this will trigger if we go below, I say 395 on the close, better 388 on the close. That's when everybody will start talking about it. But even then, the downside potential is not worth the risk to get hit on the upside if you short it. It's just a stock that if you really look at it objectively, there's not that much upside left, especially considering the valuations. Let's take a look at Amazon. Look at this. It's nothing. It has broken the two uptrends. That's bearish, but we got this monster support zone that goes all the way back to 2020 right below it. So there's really not much that we can do on the short side with Amazon. Right? If we take the middle of the support zone, we're talking about $8 to the downside. But if it goes up to this resistance zone right here. So that's about $6-7. That's not an attractive risk reward ratio. Let's take a look at Apple. Now, look, Apple has a really clear structure that it's been following that's really nice to trade. All right, you can see it right here. Classic. Up move, consolidation. New up move with new high, consolidation. New up move with new high. So what's going to happen now? That's right, consolidation, right? That's the next move that we have in the Apple stock. Makes complete sense. And that's exactly what we're seeing. We're seeing no new highs. Basically, if you take a look at it, the old support, the old resistance zone, the purple zone, that's now support. And we can draw basically a line here. And what do we see? Since July, Apple basically goes sideways. Now, if we can get Apple here around 216, 217, okay, I'm interested. I'm listening for this trade, but right now, nothing needs to be done. Where's the action at? It's in NVIDIA. We saw the massive breakout, big buy signal. This looks really nice and juicy. We got an open gap and a support zone right here. We'll probably go back here. If it turns around, we want to trade it. Another stock to keep an eye on, Oracle. Look at this. Even though we got the big tech news from Google, Oracle made a new all-time high and it's holding up. It's confirming. I wouldn't buy this breakout right here. But if we get a test of the upper channel that we're breaking out of and then go up, that's really bullish. There is money to be made in this market. It might just not be in the stocks that you bought and liked so far. I would stay away from Microsoft. I would stay away from Apple. I would stay away from Amazon. I would definitely stay away from Google because we don't know what's going to happen with it. Considering I was in the market when they tried to do the same with Microsoft and it was a big nothing burger. Probably that's what's going to be the result. But maybe Google shareholders will actually make more money if they have to spin out YouTube and whatnot. Doesn't matter to us because as swing traders, we just want to trade. We got to go where the momentum is. All right. So what's holding up the market? It's NVIDIA, it's the chips, and it's some software big names like Oracle. That's where I would look at right now if I want to trade anything. But sometimes the best trade you do is the trade you didn't make. Sometimes it's just the best to sit on the sideline and do nothing. And that's really what the charts of that I just showed you of most of the big tech stocks told us. Don't do anything. Just wait out. The Christmas presents will come. Have a great day. Talk to you soon. Bye-bye.